Ladies and gentlemen, boys and girls, we are kicking this thing off. Per usual, we're going to go over the stock market's expected moves, kind of give you my thoughts. While last week they most certainly were not a just full-blown V-shaped recovery, absolutely send it because, you know, world peace. We have the cure for everything. We have found the cure for cancer. No one will ever fight ever again. Yeah, at least that's what you would have thought if you looked at the S&P chart or any other chart. It was big tech fix the world. So let's just jump in from the top, kick it off with $1. As far as the open goes, we're kind of back to our normal like Sunday opens of just nothing. And I like these because I specifically plan everything out the night before when things are calm because nothing's moving. No one's cramming news down your face with any kind of manipulation. You're of clear, sound mind, and that's what I like. So when we open up like this, cool. But actually, I jumped ahead of myself. Let's check out my FX book and see what data we got this week. I know we have Jackson Hole this week. So give me 1 second. Let me just get that monitor down here. All right, economic calendar. FOMC minutes on the 21st, which is a Wednesday. Oh, as it says right here, Wednesday. And then Jackson Hole. Okay, so we got a little vol. That's in 2 days. This is in 3 days. Don't let that confuse you with everything's on August 21st. It's interesting. Thursday, jobless claims, PMI. We've got some letters again. Jackson Hole Symposium. We're going to continue that thing on. And then new home sales. And then we finish up the week with Powell and some more Jackson Hole Symposium. Now, you might notice, my head might be in the way, Fed Chair Powell speech. That's going to be in 4 days. But then there's the Jackson Hole Symposium in 5 days, all on August 23rd. So, you know, let that happen. I'm sure it has something. Let me get my chair out of the way so you guys don't think I'm crazy. Yeah, look at that. And that's just funny. I'm making a big deal out of nothing, but anyway. So we have some news, some letters this week, some things that might move the market. I am still short the U.S. dollar, Japanese yen, which is I am short the U.S. dollar, but I'm actually bullish the yen. I want them to start raising rates. This is a longer-term play, so just know that when I'm looking at this, it's more of a weekly, monthly time frame. And if we look here on the weekly, got a little bit of a bounce, hopefully just building up that bear flag. I talked about last week being green. I don't really care for the green open right now. I do want to add on to this, but I kind of want the red to show up, right? The continuation. I have enough. If once we turn that and we start headed south, I am going to add short. Bitcoin, as far as the weekly goes, just anyway. Sorry about these magic yellow boxes. We dropped down, so we went zone to zone all in 1 week, and then the last week we just stayed inside the zone, did ultimately nothing. We did drop down to that. I did buy another coin. We popped back up. We're holding right here. And all last week I talked about kind of bullish above the blue, bearish below the yellow. We just need to get to it, you know. On a smaller time frame, yeah, technically we're putting in a higher low. We put in some higher lows. If we don't even break out of the zone, technically that's a higher low. I don't know if this week would be a real big crypto mover, but if we're talking about the dollar, man, gold finally broke just that not ultimate, but the latest zone we had. This should be all-time high, so there's nothing for me to break down just yet. Can't really draw the zones until they get created. And we'll just really zoom out here. There's gold. I guess I would be bullish. I'd be bullish gold, but I would wait for the dip buy if I was in it. Not something I would buy right now on the futures. Also, not something I don't think it's worth shorting right now. Because while that might be a little bit overbought, I learned this lesson last week. Let me tell you guys about that. Going short the market, that's just continuing to rip up. So, wait for the dip buy. If it pulled back into that zone, I would just take a zone play on this. As far as the S&P goes, a little bit of a green open and above that zone. You know how annoying that is? You know how annoying it was to go short last week, by the way? Jumped up, hit that. Now, these white zones are more 15-minute time frames, and at the open, we jumped up, we hit that. We're selling back off a little bit, kind of holding. My puts I had expired last week, so I'm actually not short right now. That was just a 100% L on that, so that was awesome. Shorting last week was so annoying. It really was. It was so tempting, too. I had 15 minutes, so I went short, right? It shot up, and then I added to the shorts. After there was conversation in the chat. I was like, nah, I'm not going to add on. Like a couple hours later, I was like, nah, I'm buying puts. It was just they baited me into this. And then at the next morning, the open, I think it was actually just that candle, I was up on just those puts, not all the previous ones. And that lasted about 15 minutes, and then it went south. So for now, I guess let's talk about all-time highs. I figured this would be a tough area to really break. I know there's a lot of people. I've seen a lot of chatter, a lot of people talking about buying like September puts, something like that. And maybe I would get on board that. Maybe I just don't want to right now after taking the L last week on those puts. Now, ultimately, my not to walk it back or anything, my account is long a lot of everything. So, every bit of those puts was just a hedge. Still, as a trader, 100%. And they were risking capital, right? So I bought them. They were either going to zero or I was going to manage a green trade. So just a crappy time. Sucks to suck. I try to go over the losses on YouTube more, but there's just I don't get why people like to freak out about those. I don't know. There's really no such thing as you don't manage a red trade. You take the trade if it goes south. That's that. That's it. There's no dwelling on it. I'd rather dwell on the green ones. How you could manage, squeeze every penny out of it you can. Keep those losses to TikTok. For now, as annoying as it is, and how much I want to just short this market right now. I'm going to have to shy away first. Let's let a couple red candles show up first. I think anybody trying to short right now, falling into that gambler's fallacy. We talk about a roulette strategy. You go up to the roulette table, and it's been red the last 6-7 times. So you put your money on black thinking, no, this is the time. And you're seeing all these green candles. You're thinking, oh, surely a red candle is about to happen. But no. In fact, that doesn't have to happen at all. So you end up buying puts, going short the ES, and then it costs you when really all you had to do was just play the trend. What someone learned the first 15 minutes as a trader, one of the first lines you even hear is, the trend is your friend. This thing's been a great friend. You're over here just turning your back. All right, let me break down the futures real quick, and then I'm going to come back and do the S&P, the QQQ, IWM, Tesla, Meta, and I'm going to put up all the expected moves on those. That we're not just kind of like bouncing around. As far as the NASDAQ goes, as soon as we get above this, I do want to shout out to Dom if he is here, because we even talked about this, but he called it out. We were at this zone, and he was like, nah. If this data comes out good, it's going to be 19.6. And someone even said, do you mean 18.6? He said, no, 19.6. He was 20 points away on a $20,000 product. That's not bad. Anyway, nailed that one. For now, gosh, I would, this is going to just suck, probably go short at this yellow zone. I draw these boxes for a reason. Now, I wouldn't buy puts. This one I would specifically, when I buy puts, if I'm taking an options play, it's probably risking capital, and I don't care about the chop. Let that thing go up, down, all around. That's my play. I just want it to be right or wrong. With this one, I'll probably more actively manage it and take a zone play, go short the NQ, and if it pops back down, even a red candle like this, I have to really stretch this out and get emotional. That's a decent money in a futures contract. So I'll take that here, and if it pops down, put my stop in the green. That way, this happens a lot in futures. I don't like to scalp, but if you're catching that knife, you really have to put your stop in the green, take that risk off the table, because once you put your stop in the green, it becomes, do I make enough to buy a bowl of Chipotle, or do I make enough to take my whole team out to Chipotle? Do I have enough to buy a Chipotle building? And I like those options. I don't like do I lose this much? In one of the practices I luckily just did from the beginning, and it's panned out very well is I don't actually get attached to that P&L number you see bouncing around on your screen. I know a lot of people do, and most people can tell me every dollar they would have spent had they made it. Like, they are infatuated with this number. If I ever say, hey, I'm up $1,000, I could tell you guys I could go long right here. We're way up here, way more than 1,000. And I tell you guys, I'm up $1,000. It's because my stop loss is probably in the green somewhere right inside here. While that says I'm up 20,000, doesn't matter. I always, in my head, it's where that stop is at because this can change at any moment. So I always don't care about the number. If I haven't moved my stop up, then I still have plenty of risk on the table. That thing could still turn on a dime, full send down, limit this thing down, and then I take 100% loss. I go from 20 grand up to a loss. Anyway, I'm probably going to go short. I'm for sure going to short this bright yellow zone. As far as short, I do mean NQ contracts. I don't know if I would buy any puts right now. If anything, if there's any kind of dips, if we were to get like a real pullback, maybe from blue zone to blue zone, at this point, and this is what I talked about last week with my group, is I'm going to start buying call options for December. That's the soonest time frame I think I care about. The only thing we have is that and by we I mean this is what I bought and what I posted, and if you agreed, then you have a very similar play and similar numbers as me. But I bought a November 15th 28 strike Palantir call. We actually bought it, so I bought it. It went up, sold it, got back in. So it's up. We're doing good. Outside of that, everything I do is going to have December's expiration. And as far as the growth account goes, I'm this close to selling that contract, just locking it in the profits, and then just buying the shares. I have been taking the money from the calls that we've sold and buying Palantir shares. I want the next 100 shares of Palantir to sell call options against it. So I don't know. We might continue to chunk it in. I'm so back and forth. Anyway, if you're following that account, then that's the Patreon, right? Just know that those alerts might be coming out. We'll see. I'm not entirely sold on one or not. As far as the Russell goes, this one did look almost like a picture-perfect bear flag, but we kind of had this pennant right here. And we broke that thing up. And like we talked about, it's been a while since we talked about, I call it like the hammer on glass, just something I made up. There's a million names for it. But here's the horizontal line is your glass, right? And then the ascending or descending line is your hammer. And we get to that point when push comes to shove, it's time to find out which one's which. Is that bulletproof glass or is this hammer just made out of graphite? One of those is about to break. More often than not, it's the horizontal pane that breaks. We did get that breaking up. For now, I wouldn't do it, but if I was bullish, I would be a little concerned with any sellers in this zone. Again, possibly looking for a dip if it did pull back. How many deltas is the Palantir call right now? And how many deltas would you buy in shares? Well, I think we have 25 shares in the account. I'd have to look at the growth account to find out. But I would just buy enough to get to 100 shares. It would cost a little bit more. And that's why I haven't, because that call was so cheap when we bought. So our exposure was so much less. We still technically have those control of the 100 shares. But I want to be able to sell calls against it. Although another thing that's not so urgent as far as Palantir goes is I want to probably keep it light in September because I don't want an S&P inclusion announcement to come out in September and then all of a sudden Palantir shoots to 40 and then all of a sudden now I'm in some 35 sold calls and now I'm in a roll position for the next 15 years. Anyway, because I do want to keep the Palantir shares like NVIDIA, so it doesn't really matter what the share price does. I want to keep the shares to collect rent on them every week. Let's get back and let's chart out our expected moves. I did already do this before the stream, so we are good to go. Because the expected move changes, these are my lines that I add. All right, actually, let's bring that up. All right, so the IWM expecting 479, QQQ 973, SPY $7.59, Tesla $12.71, Meta $16.57, Microsoft $9.66, NVIDIA $7.20, Amazon $5.29, Apple 548, Google 462, Ford 39 cents coming in hot. We got Palantir with the $1.74, Intel 93 cents, our latest edition, and Amadon. It's gonna be Amadon forever. AMD at 708. We did buy, and by we again, shout out to Dom. He brought up the 20 strike call on Intel. I know I'm ADDing this up, and I'm sorry, guys. He bought the 20 strike call on Intel for March. I ended up buying the 2021 because he's wrong and I'm right, and surely mine will be a better deal, which is why I did that. He told me to get off his strike price, so I did. I found a better one. Just kidding. I do like Intel at this price. Maybe not as I wouldn't be as fanatic. I don't know what's the right word here. I'm not that entirely thrilled, but I do think Intel is pretty cheap. I got the 21, and Dom got 20. No, I didn't agree. We got different strikes. That way, I can be right, and it was my idea. John's asking if I have the upgraded premium or not. I do not right now, because I missed the Black Friday special, or whatever special just came out, July 4th. I got to get the Black Friday special. I've never actually been able to buy TradingView on the discount. I've literally paid like $700 a year. Everyone else is like, oh, I do the 50% off time, and it bugs me. So out of principle, I have to wait until it happens. Dom was the instigator and the genius. We just made it better. I see what you're doing there. I just want to critique it, I want to do the profitable version. If you guys don't understand the jokes I'm making, the difference between the 20 and the 21 strike, negligible. They will. In fact, I think he was already up by the time he bought ours, so the profits even at that point would still be the same. But all jokes aside, I'm going to keep making that. I'm going to keep making that joke over and over again. Somehow, mine will be better than his, and I'll die by that. So I'm drawing out, are these expected moves? These are not support and resistance levels. That might confuse you after watching me for a little bit. She's like, wait a minute. We bounce off those lines a lot. And it's just, once you understand what they are, how market makers use these, then it makes a little bit more sense. I should have a video on YouTube called Total Technical Analysis, and it does go over what these are, how the market makers use them, how delta hedging takes place, why you should know about it, whether you trade options or not. So definitely check that video out. I'm sure I'll repeat myself eventually, but I'm trying not to repeat myself so much on these videos, because I do tend to repeat myself a lot. And there is a video library coming out of popular questions. So hopefully you guys can just check out that playlist. Man, what? I don't know. Apple annoys me. Not which let's take a poll. Which one annoys you more, Apple or Amazon? Do we already do Amazon? Amazon's just not the same. After they split, I feel like that was like a bad breakup. Just do the expected moves on Ford. For anybody buying Ford, I'm not. I just sold all mine, but I had it for a decade. This is a great ticker because of it just checks all the boxes. It pays a dividend. It's super liquid as far as options go. So you can go in and buy 100. Well, I guess you could buy, 10,000 shares and sell 100 contracts. Both IVs suck. They do. Why is Amazon comparing to Apple? We know Apple IVs suck because it's just Apple. It's not the biggest mover. There's no excitement there. Amazon was bringing it in. Bezos, I didn't agree with him because he wears a puffy vest. You don't trust people that wear a puffy vest. But he still had a great ticker. His ego kept the whole split out, and then all of a sudden they had to split again. AMD just shot. AMD might be a decent long play still. All right. So I update all the expected moves. So if you guys are on the Patreon or YouTube member, you guys have my chart links. You'll have all these zones. Let's break a couple down real quick. All right. As far as Tesla goes, if you're a bear, I have this gray zone right here. This gray zone is kind of a midpoint from a lot of volatility, from very highs to very lows. Decent zone. It's not just a midpoint. But it's kind of like, are we bullish? If we get above that, it's time to start being bullish Tesla. If we stay below it, then bears still very much intact. Still kind of like a lower high situation going on. Flirting with that right there. Personally, I do think it's going to go up. I think we'll see Tesla up here at this zone before we. I guess the question would be Tesla to 230 or 200 first, and I think it would be 230. Outside of any surprisers, but I think we're coming back down. Shout out to everybody who bought the dip on VIX, and then it just kept dipping. Honestly, if you did that, I'm sorry. Hopefully you watched me or listened to me. Maybe you only need to learn that lesson once. I watched so many people in this past maybe 2 weeks, buy the dip on the VIX, UVXY. They're long calls. They're long share. They're just long the VIX, like the Scarecrow and the Boogeyman are coming out at the same time, and then it just never happened. And I watched that just burn so many accounts. That is what we call in the Mentorship group the middle finger pattern, and it put the middle finger to your account. That's what happened. Especially if you lost on that trade, then I definitely don't want to kick while you're down. But that's what burns me the most about that trade is that I just watched so many people lose on it, and I can't stand how many people push that trade. Like, man. Which put to sell on AMD? I can ADD it up a little bit more. Let's go to Amadon. I would sell the 145s. Right above that zone. I think it holds that zone. I would buy it at 145 as a zone play anyway. So grab a couple of deltas and sell the 145s. So buying that is what caused you to have your first massive loss buying the VIX. I'm sorry about that, man. People lose on that all the time. You want to talk about just losing in droves. Remember the TVIX? That was an ETF for it? Gone because it couldn't perform. Literally everybody lost on that one. So I'm mad because I don't like it when people lose. I genuinely want everybody to succeed because of what stocks have done for me. I know it sounds cheesy, but everybody just needs to know these things and have some kind of income. You don't have to be a full-time trader and do the laptop lifestyle. That's dumb. That's annoying, actually. Try getting a loan. Try going somewhere. Or pull all your capital out and then just buy it cash, and then that sucks. It's a full-time. I didn't want to go on this rant. Full-time trading sucks. It really does. Because when you realize how much money you make on your capital, you don't want to take it out. Go to a bank and tell them you're a YouTuber or you trade stocks for a living. And then when they stop laughing, you got to tell them you're serious. Now I can add, by the way, I'm a TikToker on there. Everything about it is just annoying. Selling options is great. That's one of the most consistent things you'll do. The big trades pay off a lot quick. But the selling options every week is just collecting a paycheck. Just say you're an entrepreneur. I mean, I do. I can do just fine. But, oh, man. The whole full-time trader thing, let me go park a Lamborghini on the beach. First of all, I went to the beach. Yeah, there's no Wi-Fi there. So, nope. You get sand in your laptop on your phone. You get water in your phone. I thought my phone was waterproof. Turns out it's not. Don Fran, the philanthropist. I trade part-time. Works well in retirement. Yeah. That's another thing that sucks. Is like most of you guys are learning how to trade while you're at your job. And you're like, man, when I make enough, because this is the first mistake I did as a trader, was I made as much as I made at my job, and I was like, I'm out. Peace out. I'm out. And that was, I quit fast. And then looking back, I was like, man, I doubled my income, and then said, let me chop that right back in half. Silly. Don't ever do that. You can't talk about the beach. You were only there one time. That's all I needed. All I needed was one time. The beach was fun. But we really took a turn on these. So I'm breaking down some tickers. Meta. Meta, I gotta say, not the strongest look. Now the markets are, if the Nasdaq opens up, Meta's probably gonna gap up. But just looking at this right now, I would say, I would go along, but like cautiously. I don't think I would put a whole lot in it. I absolutely love Meta. It's my number one position in my investment account. But if I went long right now, I'd put my stop at 522.35. I'm not even $3 off from where we're at. Microsoft is another favorite. I would wait. Just technically speaking, as far as Microsoft goes, a lot of the bears could be calling that a lower high. Just look at, they could call that a giant bear flag. Ultimately, what I'm thinking is more horizontal. When we just scrunch it up, we're very just horizontal right here. So let's kind of hang on. I'm going to make these bright yellow just so we know. Again, these charts are my notes, so that's why when I make it a different shade, there is a very there's a very good reason. Hang on, right there. All right, so we break. Got to tone this down a bit. All right, so we know we are in just kind of horizontal territory right there. Getting above that 430 mark, I think we're rocking and rolling. In fact, I'm going to give the signal to the market makers. They don't need to worry about these lower level zones. So make it happen, Captain. You know what? Let's do POAI first, and then I'm going to break down NVIDIA. POAI, Predictive Oncology. This is one I do have in my investment account. And here's why I don't like to just average down. Can you imagine just adding on and adding on and adding on? Trust me, guys, it only takes hopefully it only takes one or two times for you to think like, man, I went from holding 100 shares to 1,000 shares. Going down 100 shares, you might have thought that sucked until you averaged down to 1,000 shares and watched the 1,000 share price movement. This is one I do like, just kind of fundamentally. There's a lot of just cancer stuff, genomics. There's a lot of those that I'm really gonna start buying. This happens to be one of the first ones. And again, I think a lot of them will perform like this, by the way, which is why I'm not trading them. It goes in my investment account. It's not even a back burner play. I put money in there, the exact same money I would put in the gas tank or at a fireworks tent. Both of them go away, and that's it. But maybe they cure that cancer, and it goes. But in the investment account I'm going to buy it now, and I'll see you guys in 5 years. If I can't say that, then it doesn't go in the investment account. This one is just trending down and trending down. The thing is this is what's gonna suck, and it's gonna make me really right or just really wrong. It's gonna keep performing this way. So this one is colon cancer. They're using AI to detect stuff like that, making improvements there. One of these companies is going to figure it out via accident, or they just had the AI help that they needed. The money was there, made it happen. They figured it out, and that thing's going to go ballistic. I just kind of hope I'm in that one, but I really do think it's a toss-up as to which company it will be. 5 years long enough as an investment? I always just say that just kind of tongue-in-cheek, but because YouTubers, they talk about their investments accounts every day. Solving the money problem. He makes a Tesla video every day. All he buys is Tesla. Nothing changed from day to day. Nothing changed. So that's why I just say, like, I'll worry about that in 5 years. That's going to include so many openings. So many people what about pre-market and extended hours? I'm going to have 5 years worth of that. What about earnings? Going to have a lot of those as well. What about this and that? Going to have it all. So unless something really changes on this, then I'm going to be in it. So as far as 5 years, is that long enough as an investment? In this day and age with technology, probably. I think things are going to change fast. Again, with AI coming, this is a trader's market, and I think we're going to start really seeing that. Once AI enters the actual stock market, we're pretty much toast. There's no way you and I are going to make any money unless it just happens to be on the same side of that brainiac over there. But realistically, I think a few years ago I probably would have said 5 years is like the beginner. If I'm going to call it an investment, I guess technically speaking, an absolute minimum of 2 years. But for me, yeah, 5 to 10 years is where I'm at. That fits because that chart looks like. Let's check out SMCI. SMCI, not really bullish till it gets above this zone right here. That very much, kind of like Microsoft, still could be that lower high getting put in. You know, if I just wanted to be biased and sleep better at night and I was in a long position, I would probably just look at, like, let's just really stretch it out. There we go. Now we're talking. It's just bullish uptrend. Trend is your friend, right? Personally, I probably wouldn't want it breaking 608. Breaks 608, I got to assume that trend just broke, and we might have a little hiccup at 580, but ultimately I think it comes down to that zone. Now, hitting this yellow zone, pulling back to like this 610. There's a speed bump zone right here as well, kind of right where we're at. We pull back. Let's say we hit that yellow zone, pull back right to here. That, you know, could be the higher low, and then we send it. So if it hits this zone, pulls back to the blue zone, and then pushes up, if I was short here, I certainly wouldn't short it that second time. At that point, I think we're about to kick that thing through. But, ladies and gentlemen of the YouTube world, I do have to hop off here. I got to get to my group. I got a birthday party to attend to, so I got to wrap all the other recordings up. But you guys will see me for sure Tuesday, hopefully tomorrow as well. A mentorship group. Don't go anywhere. The YouTube world, make sure you're subscribed, and I'll see you guys.